Hi, everyone. Welcome back to Protect Your Farm Business, where we talk about all things ag business related. And I am Ashley Westerhold from the University of Idaho Extension, and I'm here to share some hopefully tips and tricks to help you and your business. I know that last week we talked about COVID-19 and its effects on supply chains for Idaho specific products. If you're interested in that topic, please feel free after this live to go and look at the video from last week. I think it was eye-opening for some people to hear why we might see the shelves empty, but hear about producers giving out free products or not having a market to sell it to when we have empty grocery stores. So if you're interested in that topic, again, it's on the channel. So make sure you check that out after this live. So today I wanted to talk about record keeping, and you might have seen that from the title. But I think it's a really important concept, especially when we hear about producers making these decisions to put out a pallet of potatoes for free. And you might have read in that article or those articles about how they gave it for free instead of incurring those storage costs. And so how did they know to do that? How did they make that decision to give it away instead of storing it? How were they able to really think about those trade-offs? And so when we think about that, those producers probably have really good record keeping systems to know that the storage costs were going to outweigh the costs that are associated with giving away free product. And they were able to do that using record keeping and maybe knowing where they are in their business. So why is record keeping important? And I kind of hinted at it in my little example that I just gave. But you need to have records and keep them to comply with tax reporting requirements. Every year, we have to file our taxes. Farmers and ranchers file a Schedule F, and you need records to file those taxes. This year, we know the state of Idaho is making sure that we have them done by June 15th because of COVID-19, and then federal was pushed to July 15th. And so what you can also do, why you should keep records, is because you can plan and make management decisions based on your records. You know, based on your records, if you need to obtain credit, you know that if you are participating in government programs, you need to have records to show that. And if you're trying to decide what to produce, you should probably have records. These records could show you all different types of things, and I'll get into that a little bit. But without record keeping, the chances of you making good decisions are poor. And for you to keep a successful business in the long run. To keep records is to make sure that you are ahead of the game, you know where the business is at. So keeping records is very important. So you must know where you are at today before you can make a decision for the future. If you want to purchase a new piece of equipment, you need to know where your finances are at today to see if that is a good decision for you. So these are the type of questions that can be answered with good records and understanding those records. So each year, if not more than that, we think that you should prepare financial statements, and you can prepare those financial statements by your records. So those financial statements include balance sheets, income statements, cash flow, enterprise budgets, but those are really the main ones that we're really interested in having you complete each year, because it can tell you where your cash is going in and out of the business. So if you think of the cash flow, you know where the inflows are and you know where the outflows are going. You also know that you can have management decisions based on those financial statements. Where you are, where are the assets, where are the loans. So it contributes, record keeping contributes to assessing the financial situation of the business at any time. So at any point of time, are you able to say, this is how much cash I have on hand? It saves you a lot of time and effort because you are able, if you keep good records, you're able to look at it right away and be able to make a decision on it. It measures your business against your projections. It measures your business maybe against another business. So if you are benchmarking yourself against other businesses and seeing where you line up, you have to keep good records. So it increases the chances of your business succeeding. The businesses that are in business today, if it wasn't luck, it was because they were really good about knowing their financials, and they were understanding of when it was a good time to buy equipment, when it was a bad time, when it was a great time to expand, when it wasn't, and measuring those differences. So you might also want to keep records and good records when you're thinking of contracts, leases, other legal agreements. So if you have a rental agreement with someone, this is a time that you need to make sure you have those records. If you need license, insurance, permits, say you sell at farmers markets, you need to make sure you have those records in a safe spot that you're able to access quickly, because if not, you could be subject to fines. You also need it if you have payroll and personnel. And so I bet all of you do that. If you have personnel, you are running a good payroll system and using record keeping as one of the biggest things in your business. So if you think about the tax implications, again, there's a Schedule F where you enter your receipts, your expenses, and then you have production records. Well, you have a federal and state tax sheet. You also might have property taxes. There is a great website called www.ruraltax.org that you can actually go on, and it can help you with farm and ranch taxes. And they have really good information on their website. And I would highly recommend that. So if you are record keeping, I would love to know what applications, what software do you use? So if you are interested or watching this, you can definitely put in the chat what type of record keeping software you use. I'm always interested to hear if people are using different software than I have ever heard of. But the ones that I am most familiar with are QuickBooks, Quicken. Some people use Google Sheets and Microsoft Excel. And so these are the ones that I've heard mostly about when it comes to record keeping. And so I wanted to maybe go into these a little bit more of their usefulness and how people are using them. So when you think of Excel and Google Sheets, you know that they're spreadsheets. They're low cost. They can keep an organized list of accounts where you can enter and categorize transactions. They can generate income statements from transactions you've entered. They can track invoices you've sent clients and cross-check them with transactions you've entered. However, Google Sheets and Excel, very time consuming. Cannot connect your business bank accounts or credit cards, so it won't automatically sort or automatically pool when you make a transaction. It cannot detect or notify you if there is a data error. So when you are using spreadsheet-based program software for your financials in record keeping, there's going to be some human error, as there always is, but there's no one to double check you and tell you when there is an error. So it's just a lot of self-checking, again, very time consuming. And you can have a lot of people working in the Google Sheets or in the Excel if you share it online. But it's also very hard to keep track of what all the changes were. And so they're very good if you're starting out and you're thinking of a low cost option, but they are not the best record keeping systems for farm and ranches. And I think that they can be used very well. And we actually have a University of Idaho record keeping Excel that I have on the Idaho Ag Biz website. And our ag economist, Ben Eborn, he created the Excel form. And I think it's a very good place to start off if you are a beginning farmer and rancher and are just trying to feel out these accounting softwares that might be useful for you. So then I talked about QuickBooks and Quicken as software that I've heard of before. So what are kind of some differences that I wanted to share with you about Quicken and QuickBooks? So Quicken is a cash accounting system, whereas QuickBooks is an accrual accounting system. And so if you have taken accounting, then you might know the difference between cash and accrual accounting. But with farming and ranching, you are able to use cash basis. So that's Schedule F again. And that is a lot different than accrual accounting. And you guys are the only people that are able to use cash accounting. So cash basis accounting is the cash transactions only. So it accounts for revenue only when the money is received and for the expenses when the money is paid out. So only when the cash comes out is when you count it, or the cash comes in is when you count it. So say you have planted or you have corn in your, let's say you have corn in a bin. That is not count as income, even though you've already produced it, and you might have already contracted it, but you didn't have cash in hand. So you didn't receive that income. So in cash accounting, you do not count for the income. Where if you had expenses, say you bought fuel in December for the next year, you paid it right away. And so that does count in that year because the cash was released. So accrual basis recognizes revenues when earned and expenses when incurred, even if the cash has not been received nor the cash has been paid. So for an example, at year end, a farmer reports how much grain is in the bin as income, even though it hasn't been taken out and you haven't been technically paid. The contract has shown that it is paid for and it will be paid for. And so in the accrual accounting, you'll say that is income, where in the cash, you wouldn't have until you had the cash. So these are differences depending on what type of system you're using. You might see those differences. So in Quicken, it's more of personal finance, where QuickBooks has been about small business finance. Quicken, you can record your family living expenses and your off-farm income, where QuickBooks, you must manually add those separately into it. You can convert Quicken files into QuickBooks. You cannot convert QuickBook files into Quicken. In Quicken, you can track investments. In Quicken, there's also financial calculators, loan, savings, retirement, refinance, college. All of those calculators are in Quicken. QuickBooks and Quicken both have budget features, so that is a good benefit for both of them. And so a lot of people ask me, what do you think is, or which one do you think it is better for me? And I know that here in Southern Idaho, a lot of our producers use QuickBooks, and a lot of that has to do with the payroll system, and QuickBooks has a better payroll system, or has a payroll system compared to Quicken, but Quicken is a lot cheaper than QuickBooks. So it just depends on your operation. I think that I should highlight 2 universities that have curriculum on both Quicken and QuickBooks that are all online. And so Quicken, Oklahoma State University, has a whole manual on Quicken each year that it is updated. So Oklahoma State University Extension has Quicken for farmers and ranchers, and then Kansas State University does QuickBooks for farmers and ranchers. And both of those are very easy manuals to read, and I think they're really good resources for you. But So I just wanted again to say how important it is to just have a system. You don't have to pay for software. Again, if you wanted Google Sheets, that works just fine. You just need to keep records, because I want you guys to know that if the land next door to you comes up for sale, if you are able to buy it or not. And the only way you'll know that is if you keep good records. Maybe another round of COVID-19 comes in the fall, and you need to know if you should pay for storage costs or give away potatoes again. And the reason you can know that is based on understanding your records and understanding the financial aspect. You need to know your bottom line, because then you'll feel comfortable when you're making a contract or selling on the open market. When to pull the trigger is when you know the bottom line. What is your cost of production? And so I really highly recommend just starting with keeping your records, and then we can move on from there of enterprise budgets. I know that we have some curriculum online that might be really great for you to look at. Kate Painter, an economist with the University of Idaho Extension, did a whole financial fitness course. They're 1 hour, 4 classes, so 4 hours, where she talks about balance sheets, income statements, cash flows, and enterprise budgets. And I think all of those would be great to watch after this. And so I can put the link into the description box for those, but I think it's a great way to start. And so with that, I will open it up for questions if anyone has any questions. And so seeing no questions, it was great to talk to you guys again today. I know it's rough out there, and I hope everyone stays safe and healthy. And I will see you next week for another segment of Protect Your Farm Business with the University of Idaho Extension. Thank you.